Hello, I'm Liz Lumley of Finextra, and we're here at Fix EMEA in London. And today I'm speaking to Mark Hemsley of BATS Trading.
Hi.
And you just came off a panel that really looked at some of the changes that are impacting market infrastructure, market structure. And one of the things that was mentioned on the panel is that there are three main things affecting market infrastructure, and those are regulations, the economy, and technology. What one of those three things sort of affects you guys the most?
Well, maybe it's taken in reverse order. From the point of view of technology, in our industry we pride ourselves on being at the forefront of technology, so that's something we're always conscious of, making sure that we have the best technology available for our markets. I think away from the sort of markets that we're involved in, other areas such as crowdfunding, cryptocurrencies, etc. are interesting parts of technology that we keep an eye on, but we don't believe we have major technology changes in our business. Then looking at the economy, that's a big factor. I think we've seen a lot more volatility in the equity markets. We've seen that in Europe, and we've seen it when we look at places like Greece, Ukraine, and we've seen it globally in terms of different timing for quantitative easing as well. So definitely a big factor in the market. I think probably for the fixed income market also a very big factor here. We've seen bond prices actually be at a all-time high because yields are at an all-time low, and I think as that starts to change, we'll see more action in the bond market as well. So the last point, regulation, yeah, definitely a massive impact on what we're doing over the next couple of years, and then how we shape our business going forward. So as we go into MiFID 2, I think we're probably at the point where some of the larger issues such as the dark pool caps, BCNs have sort of been decided, and we're right down into the implementation detail at the moment.
Yeah, I'm glad you mentioned MiFID 2. That seems to be a big topic of conversation at the event, and sort of a lot of people are anticipating the changes that MiFID 2 will bring to the industry. What will be different in terms of sort of the trade reporting requirements and some of the behavior firms will need to comply?
Well, if we look at the equity arena first, I mean, a lot of what we've been doing around trade reporting, we're the largest OTC trade reporting venue in Europe now. The main difference on the equity side of the business will be the extension into the equity-like products, such as depository receipts and ETFs, etc. So that's the main change there. The more fundamental change of the industry is the amount of transparency that will now be requested of other markets, such as the fixed income market, the swaps market, the commodities market as well. And so they'll all have trade reporting requirements, and that's very new in terms of the way that's going to be structured.
The panel also discussed that with all this raft of new regulations hitting the industry, that the buy and the sell side really need to work closer together in order to meet some of the compliance requirements. You know, what can be done to foster that closer relationship?
Well, I think the project we did recently, Baxter, was a very good example of that, particularly on the trade reporting side. And so we had very early involvement from the sell side and the buy side in analysing the problems, and then particularly the sell side were highly involved in working out the project timescale, so that was very good. And actually what we were able to do was deliver a project that really worked for the sell side, the buy side, the regulators, as well as ourselves. And so that's a great example, but it's about analysis and involvement in the project early on.